While all eyes have been on China, another global power has been making a huge financial move, and it's gone almost completely under the radar. We're talking about India and what looks like its quiet but absolutely massive exit from the US dollar system.
So here's the central mystery. For 3 decades, India was one of the most reliable buyers of American bonds. It was the bedrock of their financial strategy. But in the last year, that bedrock has just completely fractured. So why? What's going on?
And the scale of this move, it's just staggering. In a single year, India's sold off over $50 billion worth of U.S. Treasuries. Now, to be perfectly clear, this isn't some minor portfolio tweak. This is a deliberate, structural shift away from American debt.
All right, so let's start by digging into the numbers, because what they show us is a genuine financial mystery that, frankly, Wall Street seems to be completely ignoring.
The thing that's truly remarkable is just the speed of this change. In just 1 year, India's holdings of U.S. Treasuries absolutely plummeted by nearly 21%. This is the first sustained annual drop in 4 years, and it breaks a long, predictable pattern of them just buying and buying. And here's where it gets really weird. You'd think they'd sell when returns are low, right? But India is dumping U.S. bonds precisely when the yields are the most attractive they've been in years. They are literally walking away from a guaranteed, risk-free return of over 4%. From a purely financial point of view, this makes 0 sense, which tells us something else. Something bigger is going on here.
So you see, this isn't a decision about yield or returns. It's a decision about risk. And that risk is part of a much bigger story. A fundamental, global breakdown in trust. Okay, so the first and most obvious question is, are they desperate for cash? Are they selling their best assets to defend a collapsing currency or bail themselves out of some crisis?
Well, the data gives us a clear and resounding no. India is sitting on near-record foreign exchange reserves of almost $700 billion. They are swimming in cash. This is not an act of desperation. It's an act of choice.
And that really gets to the heart of it. The selling is driven by choice, not by need. It's a strategic pivot, a conscious decision to lower their exposure to the American financial system. So what is the risk they're so worried about?
This right here, this was the wake-up call for the entire world. In early 2022, central bankers in Mumbai watched the West freeze over $300 billion of Russia's assets, basically overnight. For a country like India, which prides itself on its strategic independence, this was a terrifying precedent. They realized their own U.S. assets weren't a safety net, but a potential kill switch that somebody else controlled.
And that brings us to the core concept here, counterparty risk. India woke up and realized that holding U.S. debt meant trusting that the U.S. government would always honor that debt, no matter what happened politically. After the Russia sanctions, that trust just evaporated. The risk of their own assets being weaponized against them suddenly became very, very real.
So if India is selling $50 billion of U.S. paper, where's all that money going? It's not just vanishing into thin air. It's being transformed into the one asset that has no counterparty risk at all.
This is the fundamental trade they're making. It's a swap. They're trading a paper promise from a foreign government for a physical, hard asset that they can hold in their own vaults, an asset that cannot be frozen with a keystroke in Washington. And the results of this shift are crystal clear. Gold now makes up a full 15% of India's reserves. That's more than double its share from just a few years ago. This is a massive, strategic reshuffling of their entire portfolio.
And for the first time in its history, the value of India's official gold holdings has crossed the $100 billion mark. Think about that. They basically sold $50 billion in paper IOUs to help build a $100 billion fortress of physical gold.
But here's where the story gets even more interesting. It's not just that India is buying gold, it's where they are putting it. And to understand this part, you really have to understand a moment of deep national trauma in India's recent history.
Let's go back to 1991. India was on the brink of total bankruptcy. To get an emergency loan, they were forced to physically fly their national gold reserves out of the country to use as collateral. For the country, it was seen as a moment of profound national humiliation, like pawning the family silver just to keep the lights on. That memory runs deep.
And that explains everything about their current strategy. You see, gold held in a vault in London is really just a ledger entry. It's subject to UK law and, as we've seen, vulnerable to sanctions. But gold held in a vault in Mumbai, that is a true sovereign asset under India's direct, physical control. It's the difference between having an IOU and having the actual gold in your hand.
So, in what had to be a massive, covert logistical operation, India has now repatriated 274 tons of gold from the UK. They are physically moving their wealth out of the Western financial system and bringing it home, completely removing that counterparty risk.
Now these moves, selling treasuries, buying gold, and bringing it all home, these are not isolated events. They are all individual steps in a much, much grander geopolitical strategy.
What we're looking at here is basically their playbook, laid out step by step. It's a clear, methodical plan to achieve strategic autonomy in a world that they believe is fracturing. They're cashing out the assets of the old system to build the infrastructure for a new one.
And they're not just planning this, they're actively building out the new financial plumbing. They're pushing for global trade to be settled in their own currency, the rupee. They're opening what are called special Vostro accounts, which let other countries hold rupees for trade. This creates whole new channels for them to trade with anyone they want, completely bypassing the US dollar. The ultimate goal? To become a fully independent third pole in a world no longer run by a single superpower.
And this has profound implications for the United States. For decades, the U.S. could always count on growing nations like India to automatically recycle their wealth back into U.S. debt, which helped fund America's deficits. That automatic buyer? They're gone. And if the fastest-growing economies in the world are now selling your debt, who's going to be left to buy it?
So the big takeaway here is pretty simple. India, arguably the swing state of the 21st century, is voting with its feet. They are building a gold-backed firewall to protect themselves from the weaponization of the West. This quiet exit is one of the most important financial stories happening right now, and it leaves us with one critical question. The smart money is heading for the exits. Who's going to be left holding the empty bag?